Hello friends, welcome to our channel No Nuggets. Nuggets of knowledge. A place where you will gain knowledge. Today, we will talk about risk class and risk class classification. Now before we talk about it, please be sure to go through our video which explains what is risk. Link for that video is at top right corner. So let's talk about risk class. What is risk class? Before we understand what is risk class, we need to understand the law of large numbers. In order for an insurance company to accept premiums and pool funds to pay for specific types of losses, the company must have a large number of similar risks. This is referred to as the law of large numbers. So in order to insure any risk, insurance company must have a pool, or the company must have large enough number of similar risks, because in case there are only, let's say there is a city having 100 homes, out of which only 2 homes need specific coverage, but rest 98 does not need that coverage. So the company will not provide insurance to cover that coverage because there is not enough number of risks. Because in case of loss, company might have to pay more than what it has pooled through premiums. So law of large numbers applies for any insurance company in order to accept risks. Now, risk class is a term used in insurance industry to refer to a group of individuals or business that have similar characteristics that make them more or less likely to incur certain types of losses or liabilities. Insurance companies use risk classification to determine the premiums that they charge for different types of insurance policies. So you can think of risk class as buckets. So insurance companies have put risks under certain buckets in order to charge premium for that particular risk and for that particular insured that falls in that risk class. For example, a person who is a smoker may be considered a higher risk for developing certain types of health issues, and as a result may be charged a higher premium for life insurance. So you might have seen while taking any life insurance policy, there is a question that is asked whether you are a smoker or not, and how many cigarettes do you smoke in a day, because that decides what are the chances of you getting into health problems. Similarly, a person who is living in an area of where the crime rate is high, right, that may be considered and or may be charged for higher premium by homeowners insurance. Why? Because of the high crime rate, the chances of burglary is high. So this is not just the area or the health issues that are considered, but there are other factors also based on which risk classifications are done. So risk classifications are based on a variety of factors like age, health, location, and occupation, among others. Risk class enables the insurer to determine equitable premium rate to be charged for requested coverage. So if you fall in a certain age group and you are living in a certain location and you are performing a certain occupation, so all these factors may combine and may be considered for determining the premium of your policy. Now let's look at risk class classification. So based on general rules of risk selection, the insured can be classified as belonging to 4 risk classes. The very first is preferred risk class. The term preferred risk class refers to a group of people or businesses who are thought to be less likely to suffer certain type of losses or liabilities. Preferred risk class is a term used in the insurance industry to describe individuals or businesses that pose lower risk to the insurance company and thus may be eligible for lower premium to cover their risk. For example, you are in 20s, you do not smoke, you do not drink, you have a regular health checkup, and you go out for exercises and everything you do to make sure to have a healthy lifestyle. So life insurance premium for you might be less as compared to those who do not perform or who do not live a healthy lifestyle. The second risk class is standard risk class. Standard risk class is a group of people or organizations that are thought to have an average or below average risk of experiencing particular losses or liabilities. In the insurance industry, the term standard risk class is frequently used to refer to people or organizations that don't considerably increase the risk to the insurance provider and don't need higher premiums to cover their risks. But their premium will be higher than the preferred risk class. So standard risk class means the average people, right? The people who don't exercise so often, the people who smoke but smoke less, uh, you know, average lifestyle towards your health, right? So those are considered as standard risk class. Substandard risk class. Now in the insurance industry, the term substandard risk class is sometimes used to describe individuals or businesses who are thought to be more vulnerable to certain types of losses or liabilities. Individuals or businesses with substandard risk classification may have characteristics that make them more likely to incur losses or liabilities, such as poor health, high risk occupation, or a history of insurance claims. So individuals or businesses classified as substandard risk may be required to pay higher premiums to cover their risk as a result. For example, you are going to buy a car insurance, right? And you had 4 claims in the previous term. So you will be considered, or your premium will be considered a little higher than a risk class or a standard risk class where there was no accidents or less number of accidents, right? So, or less number of claims. The last classification is declined risk class. As the name suggests, the term declined risk class refers to a group of people or businesses who are deemed too risky for an insurance company to cover. This means that the insurance company has decided not to provide insurance coverage to these individuals or businesses. And why is that so? Because they pose too great a risk of incurring losses or liabilities, or because they do not meet certain underwriting guidelines or eligibility criteria as required by the company. Those are considered as declined risk class. Now, so individuals or businesses with declined risk classifications have certain characteristics that make them very likely to incur losses or liabilities. Right, so like you are a chain smoker, or you drink too much, right? Or you may be in an occupation which is very high risk occupation. So in such cases, insurance company might not provide insurance for you. So considering all risk classifications, let's understand through an example. A healthy non-smoking young adult, what do you think? Where will it fall? So a healthy non-smoking young adult would likely to receive standard premium for a life insurance policy, while a smoker with family history of terminal illnesses may be considered a substandard risk, who likely to pay much more for the same type of policy. So I hope you understand what is risk class and what is risk class classification. Based on risk class, insurance companies decide what premium to charge. I hope you like this video and you have gained knowledge. Please like and subscribe to our channel and watch out for more videos like this to gain knowledge. Thank you.